Welcome back to Explain the Charts, where today we are diving deep into Apple Incorporated, ticker symbol Apple, on this Wednesday, March 25th, 2026. The market is currently buzzing with news as Apple approaches its Worldwide Developers Conference, or WWDC, scheduled for June. Sentiment has been bolstered significantly by reports of a potential foldable iPhone and the expansion of the Apple Business advertising platform. Analysts from Morgan Stanley, including Eric Woodring, have reaffirmed an overweight rating with price targets as high as $315. This optimism is driven by record iPhone upgrade rates and a 5-year high in users switching to the iOS ecosystem. Furthermore, Bank of America has maintained a buy rating despite a slight price target adjustment to $320, citing a hardware roadmap that looks incredibly strong for 2026. On the geopolitical front, reports of a peace plan regarding the conflict in Iran are cooling oil prices and helping the broader tech sector find its footing. Apple's services segment continues to be a massive cash cow, providing a defensive buffer even as foreign smartphone shipments in China face some headwinds. However, investors are also watching the launch of the AirPods Max 2 and the integration of Apple Intelligence to see if hardware growth can outpace rising costs. Currently, Apple is trading around the $252 mark, and the daily chart reveals some fascinating trends over the past year. If we look at the one-day chart over the long term, we see a clear recovery path from the lows of early 2025 when the stock dipped into the $170s. The steady ascent toward the current levels has been marked by higher lows, suggesting a robust underlying demand for the stock. Narrowing our focus to the more recent daily candles, we can see that Apple hit a significant high near $288 in late 2025 before a healthy correction took place. Throughout early 2026, the stock has been consolidating, finding firm support in the $244 to $250 region. This consolidation is clearly visible as the price has spent several weeks bouncing within this range, testing the resolve of both bulls and bears. The news of Apple Business advertising appearing in Maps and Siri seems to have provided the catalyst needed to keep the price above that $250 floor. Notice the high volume on the green candles recently, which indicates that institutional buyers might be accumulating shares ahead of the June conference. From a bullish perspective, the stock needs to clear the $260 resistance level to confirm a new leg up toward those all-time highs. If it fails to hold the $244 level, we could see a bearish reversal that tests the $230 support zone, which was a pivot point back in late 2025. Long-term, the trend remains bullish as long as the stock stays above its 200-day moving average, which is currently trending lower than the current price. The current P/E ratio of nearly 32 shows that investors are willing to pay a premium for Apple's AI and services growth. We also see that the market is beginning to ignore some of the negative shipment data from China, focusing instead on the increased average selling price of the iPhone. This shift in narrative is a key reason why the stock has remained resilient despite broader economic jitters. As we look at these daily candles from late 2025 through today, March 25, 2026, the structure remains one of accumulation rather than distribution. The lack of a sharp sell-off despite geopolitical tensions suggests that Apple is being viewed once again as a safe haven tech play. Short-term traders should keep a close eye on the volume spikes that accompany any moves above $255. Now, let's zoom in on the hourly data to see how the stock has behaved over the last few trading sessions. Switching to the 1-hour chart, we can see the price action more clearly following the pre-Fed jitters mentioned in recent financial news. On March 23rd, the stock tested the $250 level multiple times, showing that buyers are stepping in aggressively at this round number. The recovery on March 24th was steady, with the stock closing near its high of the day, which is a bullish signal for the following session. Looking at the hourly candles between March 16th and March 25th, we can see a series of small, tight consolidations followed by upward pushes. This step-up pattern is often indicative of a controlled rally where sellers are being absorbed by consistent demand. The $252 level has acted as a temporary ceiling, but we are currently seeing candles close above it in today's session. If the hourly trend continues to hold the VWP, or volume-weighted average price, it confirms that the intraday momentum is in favor of the bulls. Resistance is currently sitting at the $254.80 level, which corresponds to yesterday's high. A breakthrough here on the hourly chart would likely trigger algorithmic buying as it clears a local peak. Conversely, an hourly close below $249 would be a warning sign that the recent recovery might be losing steam. The volatility around the 1300 hours Universal Time Coordinated mark on previous days suggests that the U.S. market open is creating significant liquidity grabs. During these times, the price has often dipped below support only to be bought back up within the same hour. This wicking behavior at $250 shows that there is a lot of hidden support just below the surface. It correlates well with the news that put buyers recently realized quick gains as the stock briefly dipped before snapping back. Now, let's look at the 15-minute chart to identify specific trade entries and the most recent intraday movements. On the 15-minute chart, we are focusing on the range from March 24th through today, March 25th. We can see a significant volume spike on March 24th around the 2016 Universal Time Coordinated mark, where the price jumped from $251 to $253.70 in a matter of minutes. This move likely coincided with the news regarding Apple's record-breaking MacBook Neo sales being highlighted by Tim Cook. Since that spike, the stock has been flag-forming, a classic bullish continuation pattern on the lower timeframes. Support on this 15-minute view is very clear at $253.10, which was the bottom of the most recent consolidation channel. We are seeing the 15-minute candles stay above the previous day's close of $251.64, showing that the overnight sentiment remained positive. If you are looking to trade this, a break above the $254.82 high seen yesterday would be the ideal entry point for a long position. Short-term bears would need to see a break of $252.50 to justify a scalp down to the $250 level. However, given the current news cycle regarding WWDC and the Apple business advertising revenue, the path of least resistance appears to be up. Intraday traders should watch for the 15-minute RSI to cool off before entering, as it was briefly overextended during the morning rally. The price is currently hovering just below the $254 resistance, waiting for a catalyst to push it through. The volume has been tapering off during this sideways movement, which often precedes a high-velocity move. This is a common occurrence before the New York session reaches its midday lull. Watch for any news updates regarding the Iran peace plan, as a definitive announcement could lift the entire Nasdaq, including Apple. For now, the intraday levels are $253.10 for support and $254.82 for resistance. To recap our analysis here at Explain the Charts, Apple is currently in a strong position technically and fundamentally. The key price levels to remember are $244 and $250 for support, and $260 followed by $288 for resistance. We believe a continuation of the bullish trend is about 70% likely, provided the $250 level is not breached on a daily closing basis. Conditions that would reinforce this bullishness include positive leaks regarding the foldable iPhone and a smooth rollout of the new advertising platform in April. If the stock closes below $244, our prediction would shift to a neutral or bearish outlook with a 60% likelihood of testing $230. Keep an eye on the WWDC dates in June, as that will be the primary driver for volatility in the second quarter. Also, monitor the caked data for China shipments. If those numbers begin to rebound, it could be the final fuel for a move to $300. The analyst targets of $315 and $320 are ambitious, but feasible if Apple's AI integration proves to be a major revenue driver. For short-term trades, use the $254.80 level as your trigger and always manage your risk with stop losses. In the long term, Apple's pivot toward a more advertising-heavy services model is a significant change to the investment narrative. This transition could lead to higher margins and a potential re-rating of the stock's valuation. We will continue to track these candles and provide updates as the price action develops. Thank you for watching this in-depth breakdown of Apple here on Explain the Charts. Make sure to like and subscribe for more technical analysis on your favorite symbols. Before we go, please remember that this video is for educational and entertainment purposes only. This is not financial advice, and you should always do your own research or consult with a professional before making any investment decisions. Market conditions can change rapidly, and trading stocks involves significant risk of loss. See you in the next analysis.